Hello, my name is Nathan. I'm a realtor in Pennsylvania and New Jersey. The reason I'm making this video is I love working with first-time home buyers. It's actually why I got into the industry because the agent who helped me and my wife buy our first house was absolutely amazing. And she told me I should get my license and get into this industry. And I followed that advice. And it was probably some of the best advice I ever got because this career just fits me and my personality. But one of the things that I run into a lot with first-time home buyers is they don't know where to start. They don't know how the process works. The things that maybe their parents told them are different than how they were. Maybe their parents bought their house 15, 20 years ago. Things are a little different now. And things are always different. They're always changing. The real estate market is not something that's always exactly the same. There's new things that happen. The economy has that effect into it. There's so many factors. So if you're the advice you get should be from somebody who's doing this on a day-to-day basis, who's up to date on what's going on, and basically who works in the field in some capacity. But one of the other issues they have is financials, whether it's not having enough savings, whether it's their credit's a little low, combination of the two, whatever the case may be. And that's usually one of the places we have to start when somebody reaches out to me. And trying to build credit is not one of the easiest things to do, especially if you don't know what you're doing, and especially if you have things on there that are causing problems. So this video is talking about credit cards and how to use them right by utilizing them to build your credit. So we're going to get into this, but I'm going to start with a disclaimer. I'm going to read this. I am not a financial expert, nor do I work in the financial industry. This information is not meant to be taken as a guarantee that you will see any improvements on your credit by simply doing what is mentioned in this video. It is recommended that you speak with a financial expert, a mortgage lender, or someone in the financial world to get advice on the specifics of your credit history and how to improve it. The reason that I say this is because, again, I'm not an expert in the financials. I'm a real estate expert because I have my license, but I'm not in that realm. I don't deal with the financing on a day-to-day basis. And what I'm going to talk about in this video is not going to help build your credit if you have other issues such as bankruptcies, repossessions, foreclosures, major collections, anything like that. This is not going to simply help because if you have major things like that on your credit history, those things are going to have to get cleared up in some capacity before you can really move forward. So you should speak with an expert to look over those things, tell you what you have to do to fix those, whether it's pay it off, whether it's there's a way to potentially get it cleared without paying it off, if it's fraud or something along those lines. That is all outside of my expertise. I recommend you speak with one of them. This video is a simplified way that I have learned by speaking with people in that realm, by doing my own research, watching different videos from other people and whatnot, and I've kind of put this all together. This is how basically to use a credit card the right way. I've also implemented this system myself on my own credit cards, and it seems to be working. So that's why I wanted to do this, because using a credit card the right way is a little confusing. And when I've tried to simply explain this to people, they seem to get more confused. So the video is basically meant to be a visual representation of that system to help you basically build this and get a credit card, put this system into place, and then grow it. And as you get more credit cards, you get a second one and a third one and a fourth one. You're going to implement this system for each one of those cards individually and just run it. So let's get into this a little bit more. So what are the important things that you need to know about your credit card? So let's say you've never had one before. Let's say your parents said, hey, don't ever get one. The worst thing in the world. You're going to destroy your credit and you're going to get screwed over. And that does happen because some parents have bad experiences with credit cards and collections and whatnot, and they tell their kids just avoid it. Credit cards are a tool, just like any other tool. If you use the tool right, it's beneficial. If you use the tool wrong, it can be harmful. So this is going to talk about the right way to use it. And we're going to get a little bit into the wrong way to use it. So what are we going to talk about in this video exactly? We're going to talk about what is credit utilization. What is your credit limit? What is your statement date? What is your payment date? What is your minimum payment? What is your statement balance? And what is your current balance? To use a credit card right, you're going to need to know what all these different terms are and what it looks like on that credit card statement when you get it. So let's define some of these terms. Your credit utilization. That's the percentage of the total credit used from the total credit available to you. So, for an example, if you have a $1,000 credit card and you use $100 of it, that's 10% of the limit. So you've utilized 10%. That's what your utilization is. It's keeping a balance of the limit versus the amount spent. However, the trick and why this gets confusing to some people is the credit card companies and the systems don't look at it as dollars spent. They look at it as percentage spent. And that's where things get a little weird, because if you have a random dollar number, let's say you have $23,750 available to you. Well, how do I know what percentage then that I need to use to stay under that? And we're going to get into that. But that's where people get confused with, because we as the public, when we're spending money on a credit card, we're thinking, oh, I spent $100 here and $300 there. Credit card company doesn't see that. They see you spent X percentage here and X percentage there. And that's what you need to know. So your credit limit. This is the maximum amount of money that you can spend on that credit card. So again, that $1,000 credit example, $1,000 is your limit. If you have two different credit cards, one at 1,000 and one at 3,000, you personally, your total credit limit is now $4,000, but that's still divided between those two cards of one 1,000 and one 3,000. You obviously can't spend $4,000 in total on the $1,000 card, but you do have $4,000 available to you as a credit limit in the whole. So you want to also keep track of what your limits are for each thing, just so you know what your budget is, because obviously if things go bad, and let's say you max out both of them, you're now $4,000 in debt that you need to pay. So keep track of that as well. Next is your statement date. This is the closing date of your credit card billing cycle. We're going to get into that a little more in the calendar example that I have, but you need to know what the statement date is, because credit cards don't bill from the first of the month to the last of the month, because the last of the month always changes. We have 30 days, 31 days, February is 28 days, but leap year is 29 days. Credit card companies don't like that. They want your bill to basically be the same days every month. So those are going to fall somewhere in the middle that we're going to see in a minute. But your statement date is basically the credit card's month. Okay. Your payment date. This is the day that your bill balance from your last statement must be paid in full, or you will accrue late payment fees and interest charges. You're going to want to avoid interest and late fees as best you can. So the system is going to help do that. The minimum payment. When you see the minimum payment, this is the amount of money you need to pay to not get charged those late fees. However, you will get charged interest if you only pay the minimum. Your statement balance. This is the amount of money you need to pay to not be charged the interest or the late fees. So the statement balance is the important thing, because that's however much money you spent in the first billing cycle, and that's how much you want to pay. Anything you pay beyond that statement balance, whether it's late fees or interest, is basically your money going to the credit card companies for free. Basically, a credit card, a simple way of explaining it, is you're borrowing money from somebody and saying, hey, I need $100 to purchase this thing, and I'm going to pay you back in a couple of weeks. As long as you do it within the time frame, you only pay back $100. Anything, if you go past that date, you're paying extra, and you don't want to waste your money. It's nothing anybody wants to do. Why would you want to waste money? So the statement balance is very important, because that's, if you do pay that balance every month, you're not spending any extra money that you don't need. And the current balance. This is the amount of money you currently owe in full with any unpaid statements and current statement balances. This number is going to be important to know, because this is what the number we're going to focus on with the utilization part of this, but not going over the percentage. So let's get into a visual of this to explain. But the credit utilization ratio, you're going to want to stay in this green area from 0 to 29%. Now, before I go a little bit further, let me preface this. Is 0% utilization possible? Yes, it is. I've heard it is. I've seen a few things on it. However, I am nowhere comfortable enough to explain how to get to a 0% utilization. And you would think 0 is, oh, I'm not spending anything. No. 0 is spending it, but paying it off in a certain way that when it gets reported as 0, but it's still used. I'm not going to explain how to do that, because I don't fully understand it myself. So we're going to pretend that 0 is a 1. And for the purposes of this video, we're going to try to utilize between 1 and 29% of your credit card. You want to avoid going above that. You can go into the 30 percentile and above into the fair. If you absolutely have to, fine. If you don't, avoid it at absolutely all costs. The further you go, the riskier things start getting. And if emergencies pop up or whatever, it's just going to get worse. So let's focus on 1 to 29% while we move forward. So let's look at a credit card statement. This is one of my online statements from my bank. I've removed my personal information here, but this is my credit card for this statement time frame. So as you can see here, my credit limit on this card is $20,000. When I first got this credit card, it was only $500. And I'll explain that a little bit when we get a little bit further into this about like how to get them and whatnot. But right now it's at a $20,000 limit. Could I increase this limit? Probably yes. My income and my credit score is pretty good that if I called them up and said, hey, I want you to increase the limit, would they? Yeah, they probably would. I don't really have a reason to. I have about 12 or so credit cards that I use the system on each of those individually. And because of that reason, I don't really have a reason to increase this particular one's limit. However, it's something I have thought about because the higher your limit, the easier it is to control the utilization rate. And that'll make sense when we get into explaining that a little bit more. But you also want to focus on this because this is the first number you're going to need to figure out what your utilization rate is. So next is the statement date. Like I said, credit cards have their monthly cycles basically of when they start and when they end, and they're not the first to the last of the month. So this is what the number you need to know of when your credit card statement starts and when it ends. Again, they're in the middle of the month. So when you get your credit card or when you're signing up online or whatever, if it doesn't say that, reach out to them, ask them. When you get the bill, it should also have it on there as well. But this is another number or date, I should say, that you're going to need to know to cycle this process correctly. So the due date, this is the important date to know because this is when you have to pay that money you spent in full so that you don't get charged that interest or those late fees. The minimum due, this is that number that if you pay that by the due date, you won't get charged the late fees, but you will get charged the interest. So you want to avoid paying the minimum if you can. You want to pay everything, but let's say something's going on, maybe you haven't got your paycheck yet and the bill's due and whatnot. At the minimum, pay the minimum, just because if you're going to have to give them extra free money, minimize how much you're going to have to give them. So pay that minimum at the minimum, but let's avoid that as well. The statement balance, this is how much you're going to pay on that due date so that you don't get charged those late fees or that interest. This is the current balance. This is the number you're going to pay attention to so that you don't go over your credit utilization percentile of going over that 29%. So this is the current balance that was owed between that 155.02 from the statement balance that I owe on the bill, plus the money that I've spent since the billing cycle closed, but before I paid that bill. So that's all the current balance is. You just want to focus on that again to avoid going over your 29% utilization. So how to cycle each statement month and to stay under that 29% and pay everything so that you're not paying those late fees or the interest. So using my credit card here as an example, we have a $20,000 limit. The credit utilization goal is 29%. So the total amount that you can spend to get to that 29% is $5,800 between the two statement cycles. Now you may be asking, well, how did I mathematically figure out $5,800? So I used to be really bad at figuring out a percentage of a number. And somebody taught me a very simple trick that made this a heck of a lot easier. So let's look at that $20,000 number for a minute. So you see that I put the decimal in there and I put that there's 0 cents. The decimal is important. That's how you're going to figure this out. So if you take that decimal and you move it over one space to the left and make that new number 2,000, $2,000 is 10% of 20,000. So moving the decimal over one space gets you 10% of the number you're starting with. If you move the decimal space over 2 spots and make that number $200, $200 is 1% of $20,000. So the way you figure out your credit utilization percentage is you would move the decimal over 2 spaces from the limit to get 200, and then you're going to take 200 and multiply it by 29. That gets $5,800. So if you, let's say you wanted to stay at 25% utilization, which is actually a good recommendation, so you have a little bit of space in case something extra happens, You would move that decimal over 2 spaces to 200, multiply 200 by 25, and whatever that dollar number is, that's the number you never want to spend over. But we're talking about a 2-month period here. We're talking about 2 different billing cycles. So if we're trying to stay at the maximum of a 29% utilization, we're going to take $5,800 and we're going to divide that total number by 2. And that gets you your per statement cycle amount that you can spend, which is going to be $2,900. Now, oddly, $2,900 is 29%, the same as the 29% utilization. But again, if you want to, let's say you only wanted to have a 20% utilization, that number is going to be different. And then obviously the number is also going to be different depending on what your limit is. When you get your first credit card, it may only be $1,000. So you're going to figure out what that percentile is going to be based on your credit limit. So the credit months of the way the billing cycles work. So from January 18th to February 17th is the first statement month, and you can spend up to that $2,900. The bill for the first statement comes in on March 12th. Then February 18th to the 17th of March is going to be your second statement month, and you can spend up to another $2,900. And you're going to make sure that something is charged to the card before the March 13th, when that bill is going to basically be processed and cleared. You're going to pay the full statement balance for the first statement month on or before March 12th. So let's get into a calendar so this looks a little bit more clear. So from January to February, all those little yellow dots are the first month of your billing cycle with that credit card's bill. So from January 18th to February 17th, you can spend up to $2,900. If you spend less, that's fine. You don't have to max that number out. But if you do, that's your limit, no more than $2,900. So then on February 18th, your bill cycle is going to close for the first month and start for the second month. And in that blue range from February to March, you could spend up to another $2,900. But you're also going to get a bill, and you're going to have to pay the bill in that same blue range. So if you look at March, that purple dot, that's when the bill comes in the mail. So you get the bill, it goes, great, I spent $2,900 between January and February, and I have to pay that. Between the first blue dot on February 18th and that orange dot that you see on March 12th, which is when the bill has to be paid, you want to make sure that you spent something else on it. It doesn't have to be the whole $2,900 for that month. It could be any amount, even if it's $5. You just want to make sure there's something. The credit card companies want to also see usage cycling as well. So if your balance is ever zero, that's good because it means you don't owe anybody anything. But the credit companies want to see it being used. So in a way, you never want to have a zero because you always want to have something being reported that's used, but you also want to pay the bill in full, not the whole thing, but the bill, so that you're not paying that extra money. So I hope this makes sense in the way that I've explained this. It's the best that I can do, and I apologize if it's still confusing. If you have questions, feel free to reach out and ask me. So if you've never had a credit card, or let's say you have bad credit and you want to start this whole process and whatnot, and let's say you get denied, let's say you get one of those credit card applications in the mail and you submit it and they deny you. The way to start, that's how I started with this card as an example, is you're going to go get what's called a secure credit card. What a secure credit card is you're going to go in and you're going to say, I want to get one, and they're going to give you a limit. Let's say it's 500 or 750 or something along those lines. Whatever they approve you for, you're going to have to give them, the bank, the money for that limit. So using my credit card, when I got it, it was 500. So I had to say to the bank, here's $500 of my money to hold. They took it, they put it in my account, but they froze it. So I couldn't use it, I couldn't withdraw it, I couldn't spend it, I could see it, but I couldn't touch it. That was for the bank to hold, so that when I used my credit card, if I maxed it out, I spent all $500 on the card and I never paid the bill, the bank could pay the bill, wipe the debt out. The bank is not out any money, but I'm still responsible for anything else that comes after that, and the card's going to probably get shut off. But that's why it's called secure. It's securing the bank, that the bank's not going to be out any money if you become irresponsible with the spending. So if you use it right, and you process this and you go through this and you spend, you pay, spend, pay, spend, pay, they will give you the money back. It took me, I believe, 6 months. So they held my $500 for 6 months. I basically used this system, not knowing the system back then, but I kind of did it this way. It's like very similar. And after 6 months, they saw that I was using it right. Everything was going good. And they said, okay. And they gave me my $500 back. And now that credit card is no longer secure. It's just a regular old credit card, just like any other credit card. So if you have to do that, that's perfectly fine. I would recommend go to your bank, see if your bank offers that. If your bank doesn't offer a secure credit card, find a bank that does. Call around, look online, see if you can find one that does. And if you do, go open up an account there. Usually opening up an account is pretty easy. And tell them when you go, I want to open up an account and I want to apply for a secure credit card, and here's the money for that. If you have to, I would say go to a credit union. Usually credit unions offer them. I have a credit union. I've had multiple credit unions. I like credit unions. Their interest rates usually are a tad bit better. Their customer service is usually a bit better. Just overall, I've liked credit unions more. I've had regular banks and I've had credit unions. I've always liked having the credit unions more. Again, recommendation, you don't have to follow it, but if your bank doesn't offer it, try one. So I hope this video was helpful. If you ever have any questions, please feel free to reach out to me. I'm more than happy to help answer anything as best I can. If it's a question that I don't know or I don't know the answer to, I will ask around. I have dozens of experts in like other realtors that I know that are more experienced than me, that have better and more broad connections than I do to different people in different realms. So use me as a resource. Just because I personally may not know somebody, I probably know somebody who knows somebody. So if you have questions about this, you can reach out to me and ask. If you need help with getting connected to a mortgage lender or something, if you want to purchase a home, I have recommendations for mortgage lenders that you can talk to. I like to be here and help and be a resource. And even if it's, again, if it's not my realm of expertise, I still want to help get you to somebody who's an expert in that field to get you the answers that you need. So I appreciate you taking the time to watch this video. Thank you so much. Have a wonderful day.